So, this was the example of a transport company, right? I can take another example, right? We can take another example of say powerhouse or the boiler house. So, we can take another example of powerhouse or boiler house, right? So, in what are the costs that we can consider for in case of powerhouse or boiler house costing, right? First is of course the supervision cost, right? Like wages of foreman, the salary of the engineer, the salary of uh, the salary of the work engineers, right, etc. Then wages need to be paid to the laborers. So, wages of coal handlers, stokers and ash removers, this can come. For maintenance, it requires maintenance. So, furnace repairs, renewable, of the renewal of the fire bars, replacement of fire irons, etc. Indirect material, service material and salt tools, fuel, cost of oil and its carriage, handling and storage, right? Water, cost of supply, purification and softening, right? Fixed overhead, rates, rent, rates, depreciation, insurance, etc., etc. So, these are the costs which is particularly specific to a power generating company or a boiler house, right? So, here is one problem. Prepare a cost sheet showing the cost of generation, the cost of steam per unit, right? Uh, so, total units of steam generated is 1 lakh units, right? Coal consumed 4 lakh 20, labor cost 72,000, water and softening charges 24,000, electricity 12,000, works and admin overheads 40,000, miscellaneous overheads 20,000, capital invested 4 lakh. Normal consumption of coal for generation of steam is 2 kg for every unit of steam generated at the rate of rupees 200 per quintal, right? So, normal consumption of coal for generation of steam is 2 kg for every unit of steam generated at the rate of rupees 200 per quintal, and interest on capital is 10%. Okay. So, you can see the solution here. So, what are the cost items or the variables? First is the coal, right? Coal 1 lakh into 2 into rupees 200 by 100 kg. So, total cost is coming 4 lakh. So, per unit is rupees 4. The labor total cost is 72,000, per unit cost 0.72. Water and softening charges total cost is 24,000. So, per unit cost is 0.24. Electricity per total cost is 12,000. So, per unit cost is 0.12. If I add, per unit cost is coming 5.08 and total cost is coming 5 lakh 8,000. Okay. So, now we can consider the fixed costs. So, works and admin overheads 40,000, miscellaneous overhead 20,000, interest on the capital, right, it is 10% per annum. So, if I calculate, it is coming to 3,03,033. So, if I add, total fixed cost is 3,333, right. If I divide it by 1 lakh, right, so it is 63,333 divided by 1 lakh. If I do this, right, so rupees per unit is 0.63, right. So, total cost is, if I add, it is 5.71, right. Here you see total variable cost is 5.08 and then 0.63 if I add. So, it is coming 5.71 and here total cost is coming 5,71,333. This is actually addition of 5 lakh 8 here, 5 lakh 8 plus 63,333. Fine. So we can calculate the total cost in this manner. Okay. Okay. Now let's before going to the next problem, let's make a quick recap, right? So in a service industry, what is service costing? Service costing is used for the industry which is belonging to providing service, not the product. Like for example, electricity supply, then hospitality, hotels, then nursing homes, hospitals, etc., etc. So in such a case, we segregate the cost into three parts: uh, semi-variable cost, variable cost, and fixed cost, right? And then we identify these cost centers, and then we add it, right, and arrive at the total cost. We will see another problem on powerhouse, right? The following cost data pertaining to the year 23-24 were collected from the books of ABC Power Company. Prepare a cost sheet showing the cost of generation of power per unit of kWh. So, you need to prepare a cost sheet here, right? So, total units, what is the information given? Total units generated 15 lakh units, right? Operation labor 16,500, plant supervision 5250, lubricants etc. 10,500, repairs and maintenance 21,000, administrative overheads 9,000, and capital cost 1,50,000. So, coal consumed per kilowatt hour for the year was 1.5 pounds, and cost of coal delivered to the power station is rupees 33.06 per metric ton, right. So, it is 1.5 pounds and the cost of coal delivered to the power station is rupees 33,000, 33 and the cost of coal delivered to power station is rupees 33.06 per metric ton. Depreciation rate is 4%, right, and interest on capital was to be taken at 1%, higher than the Reserve Bank rate at 6% per annum. Okay. So, these are the conditions and we have to compute one cost sheet. So, here is the solution. So, coal 33,734 per kilowatt hour, if I calculate, it is coming 2.25. Operation labor 16,500, lubricants and supplies 10,500, per unit operation labor is 11, lubricants and supplies it is 7, repairs and maintenance total is 21, and per kilowatt hour is 14, depreciation is total is 6,000, per kilowatt hour is 4. Okay. So, these are the variable cost. You see the data is given here, right. So, so you see total units generated is given here, right, and the total costs are given here. Okay. Fine. Now, these were the variable costs. Now, there are fixed expenses like plant supervision 5,250, admin overheads 9,000, interest 7% on, because 1% above the rate, RBI rate, so 6% plus 1%, 7%, so 10,500. So, now if you add this total, you will get 1,12,484, right, which is coming to 75 per unit, right. 16.5 is a variable cost per kilowatt hour, and 75 rupees is a total cost, unit cost per kilowatt hour. So cost of 1 metric ton is this, here is the calculation is given. Cost of 1 metric ton of 2204.62 pounds of coal is equal to 33.06. It is given, right? So therefore, cost of 1.5 the cost of 1 metric ton of coal is 33.06. It is given. Therefore, the cost of 1.5 pounds, it is approximately 2.25, and cost of coal for generating 15 lakh units of power, it is 33.06 into 1.5 into 15 lakh divided by 2205. So, it is coming to 33,734, which is shown here, 33,734, right, which is shown here. It is 33,734. This value is coming from here. Okay, fine. So this was the example of a this was the example of a, a, a So this was the example of a electricity power producing company, right? So it can compute its per unit cost of power, right, by factoring in all the variable costs and the fixed cost which is incurring because of this. Okay. Now, so we discussed transport company, we discussed the electricity producing company also. Now, what we will do? We will discuss the operation cost of a movie theater. Okay. So now we have discussed one example from the transport company, then one another example from the electricity producer, and now we are discussing a third example, which is a movie theater, right? So movie theater is also is a service industry, right? So we will see how to prepare the cost sheet, right? So here is one manager, right, who takes 800 rupees per month. There are 10 gatekeepers who take 200 rupees per month, 2 operators who take 400 rupees per month, 4 clerks who takes 250 rupees per month. Electricity and oil is rupees 11,655. Carbon rupees 7,235. There are other miscellaneous expenditures which is 5,425. Then advertisement cost is quite high, that is 34,710. There are other admin expenses and it is rupees around 18,000, and hire of print. Print means for for showing the movie, right? For showing the movie, you need a approved version of the movie to show. For that license, they pay rupees 1,40,700. Okay. Now, so these are the costs. The premises where the movie is been shown, there the value is rupees 6 lakh, and the projector is the projecting machine, right, is rupees 3,20,000, and the depreciation rate is considered as 10%, right. Now in the movie hall, there are 3 classes, right, of seats. The first class seats 250, second class 250, and class 3 is rupees 125. Okay. So I have to prepare the cost per man, right? So now usually what happens, unless the movie is really hit, right, really a big hit, it some part of movie theater hall it remains empty, right? So here we are assuming that on average 20% of the seats remain empty, right, remain vacant, right? So now, as I said, we will segregate into fixed cost and the variable cost. So in the fixed cost, the first one is manager's salary, that is 800 into 12, that is 9600. Gatekeeper salary 200 into 10 into 12, 24,000. Operator salary 400 into 2 into 12, 9,600. Clerk salary uh, uh, 250 into 4 clerks for 12 months. So it is 12,000, so 12,000, right? Admin expense 18,000. Okay, I repeat. So it is manager's salary. Manager's salary, there is one manager, right? So it is 800 into 12, 9,600. Gatekeeper's salary, there are 10 gatekeepers. So 10 into 12, 200 into 12 for 12 months. It is 24,000. Operator's salary, there are two operators. So 400 rupees is their salary. So 400 into 2 into 12, 9,600. There are four clerks, each year are taking, getting a salary of 250. So 250 into 4 into 12 months, so 12,000. Depreciation is 10%. Depreciation is to be taken on 6 lakh, right? So 6 lakh and their okay. Now depreciation on premises is, I'm taking it, the life is 15 years, right? So 6 lakh by 15 years is 40,000, and on projectors and equipments it is 10% flat. So 10% on 3,20,000 is 32,000. So if you add all this, if you add, right, you get the total fixed cost, which is 1,45,200. Okay. Now variable cost. So these were the fixed costs. What are the variable cost? Variable cost is electricity and oil, 11,655, carbon 7,235, miscellaneous expenses 5,425, advertisement 34,710, and higher of the print copy, it is 1,40,700. So if you add, it is 1,99,725, right? And that means if you add A and B, right, this is A and this is B, if you add this, the total operating cost is 3,44,925. So this is my total cost, right? I need to calculate what? I need to calculate the cost per man show, right? So 3,44,925, it is coming from here, right? Divided by 9,85,500, right? This is the man show. So cost total man show. So it is coming to 0.35, right? Then on the gross profit, if we take 30% profit, right? So 0.35 into 70% into 30% by 70%, it is 0.15. So rate per man show is 0.50, right? So that is how we can calculate the cost per man show in a movie theater. Okay. Now, if I have to compute the total man show for the month, right? How can we do that? So 0.5 into 1, right? For class 1, it is 0.5, 0.5 into 2, it is 1, and class 3 is 0.5 into 3, that is 1.50. Why we are taking the weights like that? Because I'm taking my assumption is it will give 30% return on gross proceeds, and weightage ratio of classes is taken as 1:2:3. So weightage ratio of classes is taken as 1:2:3, right? So computation of total man show for the month, right? So we can calculate the total man show for the month like this. So class 1, how many seats? 250x, it is given in the question, right? You see 250, right? 250 for class 2 also 250, for class 3 it is 125. So what is the weight? Weight is 1, 2 and 3 respectively. Days for all of them it is 365 days. Shows per day 3, right? So occupancy, we are assuming that 20% on average, right, remains vacant. So, occupancy is 80%, right. Now, if I calculate this, right, if I multiply, I get what from class 1, 2,19,000, for class 2, 4,38,000, and for class 3, 3,28,500. So, total man show is 9,85,500. So, that is the total man show for a month, right, from a movie theater. Okay. So, this is the this is how we can calculate the cost of man show in a movie theater. Okay. Now, we will discuss that how the compute in case of hospital, how the service cost can be computed. So, what are the in case of hospital costing? In case of hospital costing, what are the key points? Uh, it is related to the cost to services billed to patients first, and the typical system divides cost accumulation centers into two parts. First is revenue producing cost centers, and second is supporting service cost centers, right. So, in a hospital, for example, the supporting service cost center can be accounts, right, and revenue producing cost center may be X-ray lab, right. So, like that we can divide. Okay. So, now you see here is a problem, right. Now, in case of a hospital, let's look at a problem. So, supervisor salary per month 2,500, nurse salary per month 1,500, ward boy salary per month 750, repairs and maintenance 7,200, food supplies 88,000, janitor and other supplies 25,000, laundry charges for the linen 28,000, medicines 64,000, cost of oxygen, x-rays, etc. 1,08,000, general admin charges allocated to the unit 99,000, and total is 4,19,000. So, total is 4,19,000. So, these are the costs incurred, right, for a hospital. There are some additional points. What are those? Hospital accommodates 25 beds plus 5 additional, right. Building rent rupees 5,250 per month, 120 days, 25 beds occupied, rest 245, 20, right. So, in a year for 120 days, 25 beds full occupied. In other days, usually 20 beds remains occupied. The extra bed hire charges is rupees 5,000. Average fee paid to the external doctor rupees 22,500 per month. Calculate the profit by unit if 150 is charged per day. Calculate the profit if 150 is charged per day. So, solution is here. Number of patient days 120 into 25. So, in 120 days, all 25 days remains occupied, and rest of the 245 days, it is average occupancy is 20, right. So, it is total is 7,900 number of, so total is 7,900, that is number of patient days. Extra beds how much? 5,000 divided by 10, that is 500. Total patient day if you add, right, it comes to 8,400. 8,400. Now, fixed costs, rent is rupees 5,250 into 12, right, equal to 63,000. Salaries, supervisors 2 into 2,500 into 12, 60,000. Nurses 72,000. Ward boys 18,000. Repairs and maintenance 7,200. General admin charges 99,000. So, total fixed cost is 3,19,200. So these are the total fixed costs. So now there are variable costs, right? What are the variable costs? Fees paid to the uh, doctors, 2,70,000. Higher charges for extra beds, 5,000. Food supplies to patients, 88,000. Janitor and other services, 25,000. Laundry charges, 28,000. Medicines supplied, rupees 64,000. Cost of X-rays, 1,08,000. Total variable cost, if you add, it is 5,88,000. So total cost, if you add this 5,88 plus 3,19,200, right? It is coming to 9,07,200, right? So average charges per patient per day, it is 150, it is coming to 150. Less cost patient per day, 108. So profit per patient day is 42, right? Okay. So we can calculate the cost in case of a operating cost in case of a hospital. Okay. Another type of very prominent, service industry is canteen service, that is which provides meals and foods and snacks and tea and coffee, etc., to its customers, to its subscribers. So meals, snacks and refreshments at subsidized rates. Objective is to ascertain total cost of running the canteen and deriving cost per unit of service. Example, cup of tea, for example, right? So what is the cost of per cup of tea, right? It may help the canteen to finalize the selling price, right? So there can be some specific cost headings which is particularly relevant to this industry. Some examples are given here, like provisions, all grocery items, soft drinks, cigarettes, etc., right? Labor, cooks, waitresses, porters, assistants, etc. Services, steam, gas, electricity, power, light, etc. Consumable stores, linen, cutlery, crockery, mops, etc. Miscellaneous overheads, rents, depreciation, insurance, etc. And credit charges for meals, tea and other sales. Okay. So these are the uh, specific cost items which is relevant for the canteen. Okay. So here is one problem, right? The items which are given here, profits needed 35% excluding interest, 25, sorry, the specific information items which is given here. First is profit needed, that is 25% excluding interest. Staff salary 80,000. Wages of room attendant 2 per day, 1 attendant per room. Lighting expense 50 per month. Power expense 20 per month. Repairs, linen, sundries and decoration, etc., rupees 10,000, 4800, 6600 and 10,000 per annum respectively. Depreciation 5% on 4 lakh. Interest rate 5% on 5 lakh. Number of rooms 100. Occupancy 80% in summers and 30% in winters. Each period of 6 months each, and each month having 30 days. So these are the information given, right? So we need to prepare the cost sheet for uh, a canteen, right? So we need to see these are the okay. So these are the information given, and we need to calculate the cost sheet of the canteen. So rooms days, how much? Rooms days is 80 into 30 into 6 plus 30 into 30 into 6, right? Uh, it is given here. It's occupancy 80% in summers, 30% in winters. Each period is having 6 months, having 30 days. Okay. So it is 80 into 30 into 6 and 30 into 30 into 6. So it is coming to 19,800, right? Now, what are the salaries? First salary is of course staff salary, so it is 80,000. Room attendant wages 39,600. Lighting is, you see, 50 into 6 into 100 into 80%, because occupancy is 80%, and 50 into 6 into 100 into 30%, that is, if I solve it, it comes to 33,000 and 33,600. Okay. Then repairs are there of 10,000. Linen, etc., the bed cover and all, it is 4,800. Sundries, small expenses, 6,600. Interior decoration and furnishings, 10,000. Depreciation, building at 5%, equipment at 10%. So, if we depreciate, it will come to 30,000. Interest on investment at 5%, it is 25,000. So, total is 2,42,200. So, that is my total cost. Okay. Now, this is the this is my total cost, right? So, this is my total cost, and from here I can calculate the total rent to be charged for all rooms, right? So, I need to add profit to it, right? So, my profit percentage I want to keep is 25%, right? So, it is coming 54,400. So, if I add these two, right? If I add these two, 2,42,000 plus 54,400. So, I will arrive at 2,97,000, right? And how many room days we calculated earlier? 19,800. So, room day per rent is, if I divide 19,800 divided by 15, right? So, I should get the, sorry. So, if I divide 54,400 divided by room days 19,400, right, I should get this answer.